Welcome back. You're watching Business Morning on Channels Television. Investment analyst from AfriInvest, Tola Bimbola, joins me now as we take a look at the fixed income segment of the market. Tola, it's great to have you on the show with me this morning. Quickly, tell us, do you feel that the bonds that were auctioned yesterday were oversubscribed? Because according to some of the reports that we've got here, they were the DMO fully allotted all three bonds that were traded yesterday.
Thank you, Harry. Certainly, that was given. The auction was oversubscribed for the three instruments that were issued. And not just that, the marginal rate also declined for the two instruments that were being reissued. That's for the 2026 and the 2020 instruments. The marginal rates came down, which was against analyst expectations that we'll probably see an increase due to the higher inflation rate that we saw on Tuesday. So that's likely going to affect activities today. For most investors who had probably exited initially, trying to position ahead for the higher rates in the auction yesterday, they probably want to re-enter the market back today.
So for the March 2036, which was a new node, one would have expected that we would see investors, hitting this particular bond really high, since, of course, it's a 20-year tenured bond.
Yeah, they did. About 20 billion or 40 billion were on offer, and solution was over 100 billion naira. So it was very much oversubscribed. But because it's a very new instrument, so it was issued, it was priced at its par value. So the coupon rates and the marginal rates, they were the same at the auction for the longer tenured 2036 that was being issued freshly.
So also looking at yesterday's, trading activities, the 8 benchmark bonds also saw some kind of activity in the days ahead. Today is Thursday. Today's trade and tomorrow's trade. What are your expectations? Do you expect to see investors continue to stay in the bonds market, in the fixed income segment of the market? Because we saw in the last couple of days, maybe because of the bond auction, they took a kind of tepid sentiment towards that market. But do you expect to see renewed bullish trading in the bonds market in the days ahead?
Certainly, like you mentioned, activities both on Tuesday and Wednesday for the longer tenured instruments, they were quite bearish. And the reason was because on Tuesday, the inflation data came out. We saw the inflation rate increased to about 11.4%, which meant that the premium, the bond yield spread over inflation reduced significantly. So for most traders, they took a short position and were selling off. That's on Tuesday. On Wednesday, we saw a bit of retracement, but because of the auction that people were apparently waiting for, it didn't get really much traction. So going into Thursday and Friday, we expect to see increased activity. Certainly, the result of the auction that came out yesterday indicated that most investors are still being very risk averse. They are still trying to take position in very risk-free securities to try and preserve value in a very risky investment environment. So that will continue to guide the activities in the markets. And of course, the MPC is meeting next week. Certainly, we do not expect that the MPC will take any major decision regarding the monetary policy rates. We expect them to keep all the rates constant, and for most market operators as well, they expect the CBN to actually hold all the key rates constant at the next MPC meeting. So we shouldn't see sell-off maybe on Thursday rather, and tomorrow. So we expect to see a greater increased activity on the bullish side.
What about for the treasury bill segment of the market? Of course, we have the same amount that was sold yesterday by the CBN at the primary market auction maturing today. That should provide some sort of liquidity. How do you expect this to affect the bills?
Yeah, certainly, like you mentioned, about 172 billion will be returned to the markets in maturing T-bills today. But then, before coming on for this program, we got information from the CBN indicating that there will be an homo mop-up today at a very much higher bid rate, 8.15%, from about 7.75 we saw at the last homo auction. So that may probably tilt activity towards the bearish side, depending on the success of the homo auction. We don't have a final figure yet on the total amount that was mopped up, but if they are significant as we expect, that should be a bearish impact on the pricing of treasury bill securities.
As well as the interbank market, because we saw average rates dropping overnight. In fact, all the tenors at the interbank market contracted yesterday. And so with this emergency mop-up by the Central Bank of Nigeria, do you expect to see a further contraction?
Yes, it should affect the interbank market as well, but we are not going to give a conclusive forecast on that. That's because for the DMBs that made provisions for the FX auction that was held earlier this week, many of them will get refunded back maybe on Thursday, that's today, or tomorrow. So depending on whether the CBN actually returns back the money, that's going to affect interbank market trading. But by and large, if the CBN Omo mop-up, if it increases significantly, the amount that is being mopped up, that would also keep interbank markets very high at the present level that we are seeing there.
Well, then some analysts are actually expecting, that's back to the treasury bill segment of the market now, that yields, which are currently at the highest, will continue to rise subject to the outcome of next week's MPC meeting. You already mentioned that, but how high do you think that this rates can go? And how do you think investors will position themselves? Do you think they'll really now begin to focus on trading more treasury bills than bonds in the coming days?
Well, yesterday we saw very bullish activity at the shorter end of the T-bills call. But regarding the MPC, we won't be supporting that position that the MPC will tighten monetary policy, because when you look at the inflation figure that's probably going to be at the core of their discussion, it is not being driven by liquidity factors, but more of structural and push factors. So the CBN may not want to react in that manner. And then when you also study the personal statement of members at the last MPC meeting, you realize that most of them are very, very dovish at the moment. In fact, some even suggested that we should see more easing by reducing the SDF rates. So there's very, very, very low probability that the MPC will be taking a tightening stance at the next MPC meeting. So if liquidity are left at the current level, then we should expect the T-bills market to be very, very attractive, for banks trying to probably put their money into use.
Well, thank you so much, Tola, for speaking to us on the program this morning. Of course, we'll keep our eye on those numbers, and we'll get back to you much later in the day.
Thank you very much, Harriet. Have a great day.
You too.